Cryptocurrency has been a buzzword for over a decade, but is it still a good investment in 2025? With market volatility, regulatory changes, and technological advancements, many investors are unsure about the future of crypto. In this guide, we'll explore the trends shaping the cryptocurrency market in 2025, highlight the risks and rewards, and provide actionable insights for navigating this evolving landscape. Stick around to discover how to position yourself for success in the world of digital assets. Don't forget to like, subscribe, and turn on notifications for more updates on smart investing strategies. 1. The evolution of cryptocurrency markets. The cryptocurrency market in 2025 is vastly different from its early days. No longer dominated by Bitcoin and Ethereum alone, the market now boasts thousands of altcoins, each with unique use cases. Stablecoins, DeFi platforms, and blockchain-based ecosystems have expanded the possibilities of crypto investment. In addition, institutional adoption has grown significantly. Large corporations and governments are integrating blockchain technology into their operations, lending credibility to the sector. However, increased adoption also means increased scrutiny, with regulatory bodies worldwide tightening their grip on crypto markets. These dynamics create both opportunities and challenges for investors. Moreover, the maturity of the market has led to the creation of crypto indexes and ETFs, allowing investors to diversify more efficiently. 2. The role of regulation. One of the biggest questions for 2025 is how regulations will impact cryptocurrency. Governments across the globe are introducing frameworks to govern digital assets. While this adds a layer of legitimacy, it also creates uncertainty. For instance, new tax laws on crypto gains or restrictions on certain transactions could affect profitability. On the flip side, clear regulations might attract more institutional investors, stabilizing the market and increasing demand. Staying informed about regulatory developments is crucial for making sound investment decisions. In regions like the European Union, comprehensive crypto regulations like MiCA, markets in crypto assets, are providing clarity, while in the United States, debates about classification as securities or commodities rage on. 3. Emerging trends in blockchain technology. Blockchain technology continues to evolve, introducing innovations that could reshape industries. Layer 2 solutions, such as roll-ups and sidechains, are addressing scalability issues. Interoperability protocols are enabling seamless communication between different blockchains, unlocking new possibilities. Investing in such projects could align with long-term sustainability goals and yield profitable returns. Quantum-resistant blockchains are also emerging as a safeguard against the potential threats of quantum computing. These advancements are laying the groundwork for more secure and scalable ecosystems. Additionally, blockchain is finding applications in supply chain management, healthcare, and real estate, broadening its utility beyond finance. 4. The growth of decentralized finance, DeFi. Decentralized finance, DeFi, is revolutionizing traditional financial systems. By eliminating intermediaries, DeFi platforms offer higher yields, faster transactions, and more transparency. From lending and borrowing to yield farming and staking, DeFi provides multiple income streams for investors. Cross-chain DeFi protocols are gaining momentum, enabling users to interact with multiple blockchains seamlessly. Liquid staking and automated market makers, AMMs, are further enhancing the DeFi ecosystem, offering innovative ways to earn passive income. As DeFi matures, its integration with traditional finance is becoming inevitable. 5. NFTs and the creator economy. Non-fungible tokens, NFTs, have moved beyond digital art to encompass music, gaming, and even real estate. In 2025, NFTs are integral to the creator economy, enabling artists, musicians, and developers to monetize their work directly. Gaming tokens and metaverse-related NFTs are also creating new revenue streams. Virtual land ownership and in-game assets are now tradable commodities, blending entertainment with investment. As technology evolves, NFTs are likely to merge with AI and AR, unlocking unprecedented possibilities. 6. Institutional investments and their impact. Institutional investments are reshaping the crypto landscape. Companies like Tesla, MicroStrategy, and payment platforms such as PayPal and Square have integrated crypto into their operations. Hedge funds and asset managers are also adding digital assets to their portfolios. Crypto custody solutions and insured wallets are becoming standard for institutions, ensuring safer transactions. Additionally, tokenized assets, such as real estate and stocks, are expanding investment options, bridging the gap between traditional and digital finance. 7. Risks to consider. Despite its potential, crypto investment carries risks. Market volatility is a significant concern, with prices often experiencing drastic swings. Security threats, such as hacks and scams, also pose challenges. Moreover, the reliance on technology means that technical failures or vulnerabilities could have catastrophic consequences. Investors should use secure wallets, enable two-factor authentication, and stay vigilant against phishing attacks. Regulatory crackdowns and geopolitical tensions can also impact market dynamics. Understanding these macroeconomic factors is crucial for managing risks effectively. Staying informed and proactive is the best defense against unforeseen challenges. 8. Diversification beyond Bitcoin and Ethereum. While Bitcoin and Ethereum remain dominant, diversification is key to maximizing returns. Altcoins like Cardano, Polkadot, and Avalanche offer unique features and growth potential. Stablecoins can provide stability during market downturns, while DeFi tokens offer high-yield opportunities. Additionally, holding a mix of long-term and short-term investments can balance risk and reward. Researching tokenomics and project roadmaps is essential for identifying promising altcoins. Community support and developer activity are also indicators of a project's potential. 9. Practical tips for navigating the 2025 crypto market. Navigating the 2025 crypto market requires a strategic approach. By following these steps, you can make informed decisions and minimize risks. Building a network of trusted advisors and joining crypto communities can also provide valuable insights. Leveraging data analytics and AI tools can enhance decision-making and improve profitability. 10. The future of crypto in 2025 and beyond. The future of cryptocurrency is promising but uncertain. As technology advances and adoption grows, new opportunities and challenges will arise. Cryptocurrencies could play a central role in global finance, reshaping how we conduct transactions, invest, and build wealth. Investors who stay informed, adapt to changes, and embrace innovation will be best positioned to succeed. Whether you're a seasoned trader or a newcomer, the crypto market offers endless possibilities for those willing to learn and take calculated risks. Collaboration between governments and blockchain developers may pave the way for central bank digital currencies, CBDCs, further integrating crypto into mainstream finance. Innovations like tokenized healthcare and decentralized identity systems could also redefine industries. Is crypto still a good investment in 2025? The answer lies in your strategy, risk tolerance, and ability to adapt to a rapidly changing landscape. By staying informed and embracing innovation, you can navigate the challenges and capitalize on opportunities in the crypto market. If you found this guide helpful, hit the like button, subscribe to our channel, and turn on notifications for more insights into the world of investing. Let's secure your financial future together.